Hi, welcome. It's Mary Ellen McGonagle here with your weekly Edge show for August 20th, 2022. Let's take a look at our agenda. We are going to take a look at some of the more impactful headline news that drove price action last week. From there, we're going to dig into the broader markets, see where we closed for the week, and then beyond. Take a look at some of those sectors. There is sector rotation potentially moving in on us, and then also sub-industry groups, all about helping you be better prepared not only for next week, but beyond. So also viewer question of the week, and that question is all about how you can buffer your portfolio against a potential pullback or more. I'll get into that and then share some examples of stocks that look quite attractive and are defensive right now. So let's take a look at that data and news from last week. First up, industrial production did rise rather sharply in July. Not a whole lot of reaction. That was earlier in the week prior to midweek news that we'll get to. Also, we did have retail sales numbers. They came in flat. However, if you stripped away the sales for gasoline, there was growth beneath that. So nice uptick there in retail sales. Earnings reports also boosted retailers. We had major retail names that reported last week. I'll share a couple of them with you. However, retailers did end the week pulling back a bit, and we'll get into that. Also, the big news last week was Wednesday's release by the Federal Reserve of notes from their most recent meeting. And most investors did view the comments as somewhat positive. The Federal Reserve did comment that if needed, they would take their foot off of the accelerator as it relates to increasing interest rates, and that did seem to soothe and calm markets' nerves. However, we did see weekless jobs claims. They did fall slightly, not a whole lot of impact there. However, price action on Friday was really impacted by the monthly close of options, and that in turn did push the markets lower. We'll get more into that as we move on. Next week, we do have a pretty heavy economic calendar. We're going to receive manufacturing PMI. That is an inflation indicator. Durable goods numbers will come out. Also high on the calendar is the Q2 GDP estimate, and that's going to be the second estimate. The first one did show negative GDP growth for the second quarter, which is not good news because the first quarter was negative as well, and two subsequent negative gross domestic product lack of growth oftentimes will precede a recession. So that's going to be closely watched. Also, core PCE, this is a very closely watched inflation number that the Federal Reserve will be looking at quite closely. So again, pretty big week next week with economic data. So from here, let's go ahead and take a look. Where did we close for the week? And here we are with a daily price chart of the S&P 500 index. And I've gone ahead and added some moving averages, some outside momentum indicators. And as we can see, this week we did rally right up into this 200-day simple moving average before the markets pulled back. And we are seeing this price action in a number of underlying stocks as well. Ideally, we would like to see a push above that 200-day moving average to give us conviction that this uptrend can remain in place. As for momentum, the RSI closed above 50 in positive territory, as did the stochastics, also up there in positive territory. So a bit neutral going into next week. From here, let's take a look at those underlying sectors within the S&P 500. And I've gone ahead and sorted out the 11 S&P 500 sectors by RSI, relative strength. I want to see where that relative outperformance is taking place and then sorted that in descending order. Again, all about spotting rotation. You're on the lookout for groups that have been down here in this lower quartile and are potentially beginning to move up to the forefront. And of note is the fact that defensive areas of the market were outperformers last week. The utility and consumer staples appear in the forefront. Both areas offer high yields, and they're coming in with some really good growth numbers. As we move forward, we can see energy has really moved up in the rankings. Just 2 weeks ago, it was one of the worst performer down in that lower right quartile, and here we are. Energy was up for the week, and I'll get into that and share a reason why as we move forward. Some other areas of note that you'll want to be aware of as it relates to these weaker areas is communication services, and this is going to be internet related. We did have that downtrend reversal attempt, and it does appear to be fizzling. We're on the cusp of negative momentum indications here, and a lot of it having to do with an almost 7% drop in Meta, formerly known as Facebook, and Alphabet. That was down almost 4%. From here, let's take a closer look at the markets, and I've populated this 2-month daily price chart view by using ETFs that are really relevant and can be very helpful in helping you stay on top of these markets. So again, up here, your relatively stronger areas, weaker areas down here to the right. And let's take a look. The US dollar had a very sharp uptick this week, and a lot of that we can see here with the momentum shifting upward. That will impact certain areas of the market, in particular basic materials and other commodities. As the dollar rises, you will tend to see a receding in those areas. Also, we did see Russell 2000 did pull back from a downtrend reversal attempt as well. This index was down almost 3%. Not what we want to see. Small cap stocks are highly risky, and ideally in a strong market, you want to see a continuation rally there. We're going to keep a close eye on that. And then also as it relates to other areas that are pulling back, semiconductors had another rather difficult week, down over 3.5%. And we can see the momentum just here on the cusp of potentially turning negative. And also with this MACD, it is trending sideways. We don't quite have that upside momentum that we experienced July into early August. Let's take a look at another area that I mentioned would be impactful to the energy group, and that is the price of oil. From here, we're going to go ahead and take a look at oil because it is on the cusp of getting back up to that $100 per barrel range. And that's a number that really piques investors' interest because it can be quite positively impactful for the growth prospects of these underlying energy stocks. So from here, I do want to go back and share with you one other metric that is I'm certainly watching very closely. Subscribers to my MEM Edge report will be aware of this. That is the yield on the 10-year Treasury, and we can see it is ticking higher. We're now at almost 3%. That 3% metric has been very closely watched. In the past, that number has pushed growth stocks down. Rising interest rates are not good for growth stocks, so we will be keeping a very close eye on that. From here, let's take a look at the Nasdaq, and this is a daily price chart. We can see that the Nasdaq did not quite make it up to this 200-day simple moving average. It had a much further advance to make because the Nasdaq did sell off the most among these larger indices. However, we can see that it also pulled back the most last week. So again, keeping an eye, relationship between interest rates and growth Nasdaq index. But there are other dynamics at play here as well. So from here, I did want to go ahead and share another area of growth that did pull back for the week. This is XRT, the S&P 500 retail index, and we can see we went into the week with a nice rally. Walmart came out with good numbers, Home Depot as well. However, into the close of the week, this ETF did pull back. It closed the week down 3%. So another area of growth that potentially is at the very least pulling back. From here, I do want to go ahead and share with you XLP chart, and that is consumer staples. This is an area that has stocks that are viewed as defensive simply because the underlying companies provide products that consumers are going to need regardless of a recession or any other economic upheaval. Also, consumer staples, most of these names provide a yield. And in a rising interest rate environment, yield stocks are attractive. Lastly, consumer staples, many of these companies are reporting strong earnings. They've been able to pass increased costs on to their very loyal customer base. So let's take a look from here at some stocks, and this is with an eye toward helping buffer volatility in the event that Friday and the latter part of last week's pullback turns into more. Not only are you in defensive areas with these names I'll be sharing with you, but also these areas are doing well for very sound reasons. So let's take a look. I will share with you 3 stocks from this sector. First up, we are taking a look at Kellogg. Now, it is a little extended. No doubt the RSI is getting up into overbought position. However, you can see it will remain there for some time. It does have that historical precedence. It is finding support at this upward trending 10-day simple moving average. And then also the company provides a nice 3.1% yield. They did report earnings back here on August 4th, 12% above estimates, and the outside momentum indicators are both trending upward. From here, let's take a look at another company that also reported earnings very recently. This is Hershey Foods, and you can see that the stock is having a nice base breakout into an uptrend. I'm going to go ahead and add a 5-day simple moving average. This can be very helpful once a stock gets into an upside momentum period, such as back here in March. We've had other uptrending periods, December into January as well. And any pullback to that 5-day, which is currently at 230, will be an ideal buy point for this upward trending stock. Also, with stockcharts.com, which I'm using today for charting purposes, you can see that by asking for a full quote, you can also receive information relating to the yield. Hershey has a nice 1.6% yield, in addition to bullish outside momentum indicators, RSI, MACD, that are both trending higher. And last up is a name that I would put on your watch list. They are due to report earnings next week. They have a 2.9% yield, and this is J.M. Smucker, SJM. And let's go ahead and put that 5-day simple moving average in. You can see it has been picking up momentum here going into the release of their earnings. Nice high volume characteristics. Outside momentum indicators are positive, which is constructive. And I always like to pull up a weekly chart when I'm examining these stocks. And sometimes it will reveal clues going into the possibility of increased upside momentum. And we can see the MACD just going into positive territory into the close this week. RSI also in positive territory. Now, it did have an outstanding gain last week. However, we can go back historically to 2019, and in the first quarter, the company did report very strong earnings, and we also experienced a very solid week and a nice continuation rally beyond that, with your outside momentum indicators turning positive. As mentioned, they are due to report next Tuesday. With that, I am going to leave it there. Everyone, I hope you have a great weekend. See you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.